reverse mortgages. I mean, we've got Tom Selleck or Henry Winkler pushing those. Thanks, guys. Bad idea. Shouldn't be doing that. It's not a good product.
Oh, man. This guy, so many opinions. Well, let's see if he's right. Let's test drive a traditional mortgage against a reverse mortgage to see which one ends up helping you out better. So let's say you're 62 years old. We're meeting up in a coffee shop to discuss your mortgage situation. So 12 years ago, when you were 50, I helped you purchase your current house. At that time, you were able to get a $2,400 payment per month that fit within your budget. You were still working, it was affordable, it worked out. So you've got this $2,400 a month mortgage payment still at age 62, and you're wondering what kind of options you have to make a change. So we look at option one. Option one is that we take advantage of the lower interest rates that are available today and the fact that your home has increased in value and you've paid down your mortgage balance some amount. And we say, well, we could lower your payment by $400 a month, making your payment $2,000 a month. That sounds good to you. So now let's fast forward 18 years. You've invited me to your 80th birthday party, and we're discussing how things have gone. And you've said you're very excited to tell me that you've now paid off your mortgage fully. You have zero mortgage because you've accelerated your payments and you paid it off in just 18 years instead of 30. I say, great, that's wonderful, good for you. And then you show me around your house. You apologize a little bit for the dated kitchen and the bathrooms that you think you now have the opportunity to get to because now you can save some money, and maybe by the time you're 85, you can afford to redo that kitchen, redo the bathrooms. Great, so that's option one. Then we're back at the coffee shop. You're 62 years old, and we discuss option two. Option two is that you could take your payment from $2,400 to $0. How is this possible? Let's use a reverse mortgage to eliminate your mortgage payment because your home has gone up and up in value and you've paid it down enough to where you can qualify to eliminate your payment altogether. So that's not just $2,000 a month. It's $24,000 over a year's time, $432,000 over that 18-year span. So now let's fast forward again to your 80th birthday party. All right, you invite me into your home. The first thing you do is you pull up your Photos app, and you're showing me these photos of you and your grandchildren and your children and their spouses, all 8 of you in Europe. You've gone to Italy, and you've gone to France, you've gone to Switzerland. You're showing me all of these landmarks that you were able to visit on this family trip you were able to pay for. Then you take me into your kitchen, and you say, gosh, look at this new Thermo King refrigerator that I just got. Isn't it just lovely how this all fits in? I've got my Wolf range sitting here too, and all of this stuff that I was able to redo 10 years ago when I remodeled my kitchen. And then you introduce me to your granddaughter, and you say that she's just graduated from college, and she says, well, it wouldn't have been possible, Grandpa, without your help in paying for half of my tuition. And you smile and are gracious about that too. So here are these things that you've been able to do over that time period. You've been able to take a trip with your family, pay for it. You've been able to remodel your house. You've been able to pay for your granddaughter's education, all because you weren't having to send $2,000 a month to a mortgage. So in my opinion, that makes a good case for why a reverse mortgage makes sense.